And quite rightly so, because if you don't live in BC for 6 months of the year, your BC medical card is invalid.
This leads into the next area is, many Canadians go down to the United States, still use bogus addresses for Canadian purposes.
Yeah.
Right? So you're down in the U.S., you don't want to give your company your real address, so you give your sister's address in Calgary or your brother's address in Vancouver. What would the CRA do in terms of penalty, in terms of when they found out?
Well, what is it that they've done it for?
Well, for example, they moved out and not declaring your true residency.
Well,
So you have
residency...
withholding tax problems, right?
Well, you can have residency and withholding tax problems, but if you... Like we had one fellow who was a CBC producer, was a dual citizen. And he was actually living in Florida and used the brother's address in California as his address, and was truly was a resident of the United States, but he used his brother's address. And he wasn't paying any tax in the States on his income that was coming from Canada, because he'd come up and do a show for 3 months or something, make a lot of money, and go back down to the States. And California caught him because he was using that address, and California state tax authorities went after him, found out, and he justified that he didn't live in California, but they then turned him over to the Feds. So you've got to watch out, because in the States, the state authority is more likely to catch you than the Feds are. And that's a tough one.
Yeah.
And you get into this business of Captain Hauser, for instance, the Air Canada pilot, who moved to the Bahamas, and he kept on flying. His wife moved to the Bahamas, and he kept on flying for Air Canada, and he would come up from the Bahamas, stay at his mother-in-law's, catch his airplane, fly, do his flying, come back. And I will never understand how the accountant and the lawyer that were dealing with him could consider him a non-resident of Canada, because he was actually in Canada 219 days in doing this. But they tried to. It's really difficult to escape income tax unless you just follow every single little bit. But let's forget about income tax for a second, though it's an interesting thing. You look after, if I have a problem, and I'm just getting the evil eye from Mitchell because I was making noise here when I'm hitting this arm. If you have somebody who I mentioned, that they live in Canada, they got an account with RBC Dominion Securities, I know you used to work for them, and I'm using the name, and they move to the States. Yeah. The chances are that RBC will not want to deal with them anymore. Am I correct on that?
That's correct. It depends on the account. I mean, as you may know, the NAFTA legislation basically says that if you have a pre-existing relationship, you can continue to deal with clients in the United States if you're a Canadian advisor for retirement accounts, but not normal regular accounts.
So if they have an RRSP, you can keep on dealing with the RRSP.
Right. Now, certain firms will license some brokers Canadian brokers for that specific purpose. But different firms handle it different ways. Some brokerage firms have refused to just basically freeze the accounts when you go over, if you become a U.S. person. Others have like a freeze and liquidation policy, as we spoke about. Others keep a small group of U.S. licensed advisors where they basically say, okay, we'll keep your account, but it's going to be managed from...
You have to go to that guy.
You got to go to that guy.
Yeah.
So it's not the same right across the board. Different firms have different compliance policies.
Every firm is different, aren't they?
Right.
That's right. But you have... By accident, I gathered. I thought you'd set out to do that, but you said it was because of a client.
We sort of morphed.
You didn't want to give away a good client.
There you go. Yeah, we were asked to help them out with a relatively complicated estate case in California. So, was fraught with difficulties. But it's an interesting story, in terms of the cross-border things. I won't mention the name of the client, but it's an interesting lesson of the law of what I call the law of unintended consequences as it relates to cross-border financial planning. Couple, a wealthy family in British Columbia here, who I dealt with in the 80s and had a large business. He sold out his business to a major corporation, and I forget, several $1 million. Let's 10 today, for example. At the time, the wasn't overly happy with the government. The NDP were in power at the time, as you recall. So he decides he's going to move to the United States. Receives this payment from the sale of his corporation and decides to become an American citizen. And of course, in those days,
it was a lot easier than it is today.
He moved down there, set up a California corporation, but of course, hired a financial planning cross-border consultant. I think the fee was, I don't know, $35,000, and then it was an annual charge of $35,000 to do the tax and the planning and so forth. Well, this guy, basically, his investments were treasury bills and bonds. There wasn't much money management or tax issues from an investment point of view, but he paid for years and years and years. Anyways, a couple of years ago, he dies. And, of course, the son and mother are left with the, of course, had set up a bypass trust. And, to get in the United States, you have estate taxation laws, so it's very typical. You'll find trusts being set up to
generation skipping trusts.
Right. And so they had these trusts set up, but of course there was some real estate involved. But all the financial planning they paid for, I mean, ultimately they went and had a CPA do the final tax return, and a lawyer, a domestic lawyer in California. The IRS, the last minute, when the CPA firm came and sort of gave them their final return, said they owed nothing, came back and asked for another $60,000. They had ongoing difficulties for about a year. We finally found somebody to help them out, but all this high-priced help, didn't help them at all. And the issue I'm driving at here is, we both know in this cross-border business, you really have to find somebody who's competent on both sides of the border.
If you don't have somebody that knows both sides of the border, you've got a real problem. I've got one over in the corner right there now, where American CPA, Canadian CA, have been doing the tax returns for this one individual. And they were brought to me because he was sick, and for a dozen years, this man has had Canadian rental properties and Canadian life, and the U.S. rental properties and the U.S. life, and all his U.S. stuff is on the U.S. returns, and all his Canadian stuff is on the Canadian returns, and nothing has been world income, which has to be done for both, because he's been living in Canada, and he's a U.S. citizen. And he's gone and died in the middle of this now, so I can't even ask him any questions. And this happens all the time.
Yeah.
But the people didn't know.
It's hard to find people. But I mean, this lesson, this client sued, and
well, his estate must have sued.
Well, his estate sued. Yeah. The estate sued and won, both with the lawyer and the CPA. So it's just an issue that you certainly, I think it's fair to say, on the cross-border investment side, it's equally.
Well, when we take this kind of thing on, we're taking on a much larger risk or a much larger responsibility, and the fees and so on are commensurately more, as it were. If you happen to be watching this live, if you're sitting there someplace in Albuquerque, New Mexico, or Sarasota, or Sacramento, or someplace like that, Salt Lake City, you are welcome to give us a call. And you can call me about a tax question, call Dan about an investment question, 1-866-980-0499. And you got a call between 7 and 8 on Wednesday night. Dan will be back next week, and I think we miss a week, and then the week after that. But give us a call if you've got a question. And if you aren't watching this live, so that you're watching it in archives or something, because somebody said, what a good idea, watch this about cross-border stuff. Your phone number in the daytime is
866-541-9952.
9952. 1-866-541-9952. And you can phone them from Sacramento, Sarasota, San Diego, any of those places. Salt Lake City, St. Louis.
Works all over.
New York, Boston, give them a call. Eureka, California. Eureka, we're here. Now, you really, though, to deal with you, and you've been very kind, because I've sent you people with very minor things, and you've answered the questions for them and steered them in the right direction. But to really deal with you, you're looking at $50,000, $250,000. What's the story?
Basically, $200,000 to $300,000.
$250,000, $200,000.
$200,000.
Okay.
Both either U.S. or Canadian. Or often what will happen is typical with a Canadian family in the United States, if they've left, they'll have two RSPs, for example, man and wife, and it might be combined value of $150,000 or $200,000. We normally, as I was mentioning last week, so the way we handle the money and manage the money is we'll manage the $300,000 with individual securities and build portfolios. If we have less than that, to diversify properly and for ease of management and costs effectiveness for the client, we'll use exchange traded funds, both Canadian and U.S.
Okay.
And it works reasonably well.